Alright guys, Victor Isibor here. You're welcome to my YouTube channel. Today it's going to be a tutorial. Alright. I want to familiarize you with the back end of your futures exchange. Okay. So that when you have a trade ongoing, you should know when to bother and when to relax your mind. A lot of newbies panic unnecessarily because of what they're seeing at their back office. So this video is for you so that you'll be able to know when to relax and when to get in panic mode. The first thing I want to tell you is focus as a newbie on your wallet balance. All right. It tells you the total amount of money that you have in your wallet. Put it into cognizance, both your margin plus your unrealized PNL. So if you add these two, one, two together, you get your total wallet balance. All right. So if you started this trade with a $200 capital, you should know that you have made a profit of $9. All right, irrespective of all these divisions and distractions that you're seeing here. This video is for a total novice to be able to understand what is going on in their back office. Okay. Now, what is this minus $15 that I'm seeing here? Okay, this is the total amount of money that is in the market that is at a loss. The total amount of money that is being traded that is at a loss. All right. Now, it is called unrealized PNL for a reason, because this loss is not a permanent loss yet, because this trade is still ongoing. That's why they call it unrealized. If I decide to manually close all the positions that are open in this trade, that is when this loss becomes a reality. So for now, this particular minus $15 can, let me say, will still go positive, because I have 100% trust in the robot that is trading for me in this exchange. If you're interested to get on board the robot, sign up, link in the description. Send me a WhatsApp message after all for me to guide you to get started. Okay? So now let us go and explain something else. All right? This PNL analysis tells you the overall health of your trades that is ongoing. Okay? Okay? So when you tap on it, here really quickly, you see it is telling me what has happened here in the past 7 days. You can go to 1 month, 3 months, but in the past 7 days, I've made $17. I have made 0 losses. All right. So in the past 1 week, this bot has given me what? Look at it. It has given me 9.16% profit. Okay. In the past 30 days, look at what it has done. 97.16% profit is what this bot has given me in the past 1 month. All right. And the day just got started and I've already made 0.3%. Very early hours of the day. I'm shooting this video very early in the day. Okay. So before the end of today, I am very, very, very optimistic that I'm going to be getting close to 2% for my daily profit. All right. So when you look at detail, okay, detail shows you day by day how much you've made trading on this account. All right, on a daily basis, it shows you how much you're making, all the activities that is going on at your back office. All right. Okay. So now let's go back to the trades and let's get to the nitty gritty. Okay. Okay. So first of all, when you look at your trades, look at this BAT USDT. You see perpetual. Now, a lot of people will be wondering, what is this perpetual? Because this video is meant for the neutrals, newbies, to understand what is going on in their back office. Now, perpetual futures, okay, known as perpetual swap or perpetuals, they are a type of derivative contract that allows traders to speculate on the future price of an asset without an expiration date. This whole thing is about contract that you're having with the exchanges. Okay. Traditional futures contracts, which have a set expiry date, perpetual futures can be held indefinitely. Normally, when you are trading futures, because you can trade futures in stocks and other markets, okay, you are speculating on the future price of a token and you put a set date. before so and so date, this BAT USDT is going to get to so and so price. If it doesn't get before that day, let me lose. That is what is obtainable elsewhere. But in crypto, you have the opportunity to go on perpetual. Like in your normal English, perpetual means forever. Okay, so that means that this trade does not have an expiration date unless you decide to close manually or maybe you get liquidated. Okay, it's perpetual. It doesn't have a date that is going to expire. Okay, so just leave it the way it is. Perpetual, in normal English translation, that is what it is. It's nothing complex. Okay, now look at these two trades right in front of you. You have the BAT USDT and you have the TRX trade. Okay, let me explain something real quick. All right, look at this logo S in front of the BAT USDT as against this logo B in front of the TRX. Now, the S stands for sell. Professionals call it short. Okay, this B stands for what? Buy. Professionals call it long. Okay, now our predictions for these two coins that are being traded are different. Okay, they are different because our analysis and predictions are different. For the BAT USDT, what we're saying is we are anticipating the market will go down. All right, we are saying the market is going to go down. So we want to make money when the market is going down. That is what we are telling the exchange. We are saying BAT is going to drop in value because in futures you make money either direction of the market. Whether the market is going down, you're making money if that is your prediction. If the market is going up, you're making money if it is your prediction. It's only in a spot that you only make money when you buy low and sell high. Where the market is going up is the only time you make money in spots. But in futures, you make money either direction. And these two trades are a classic example of both. Okay, so let us analyze BAT first. Then we'll come to TRX later. Now, this BAT, look at the logo. Sell or short. That means we say as the price of BAT is going down, we are making money. So we are predicting that the price of BAT is going to go down. Look at the entry price of BAT when we entered the trade, 0.2280. This one is the current price now, 0.23. That means that the price of BAT has what? Gone up, pump from 0.22 to 0.23. That's why you see that we are in red. Because right now our prediction is not working at the moment. Okay, we say the price is going to go down, it's going up. All right, okay, now let's do this. Let's explain other things in this trade. Now, when you see this minus 17.65%, a lot of people get into panic mode. Hey, I've lost money. Especially when they click on this share button that people use to share results. Let me click on it and you see what's going to pop up. Oh, I'm finished. Minus 17% of my capital is gone. But did forget to look at the analysis. The entry price 0.22, the current price is 0.23, and that's why you are in that negative. Okay, now let me tell you what that negative is all about. Now, this minus 18%, okay, it is not the 18% of your total capital. No, it's 18% of your money that is in this particular trade. How much is being traded for me in BAT? It is actually $2.03. It is not the total $200 in my portfolio, in my wallet balance. No, only 2.03 USDT is dedicated to BAT. So this 17% loss is 17% of $2, which is how much? Which is actually 0.35 cents. The money I am actually losing in this trade right now is 0.37 cents. But you see, when you look at the percentage, it puts you in panic mode like you are in trouble. But the truth of the matter is just 36 cents is what is being, lost right now in this trade. And the trade is still ongoing. And it will definitely go in profit because the bot that I'm trading has not closed any trade in a loss in the past 1 month for me. So why now? Why today? All right. So This percentage is the percentage of loss vis-a-vis the amount of money that is being traded for me, not vis-a-vis my total wallet balance. All right? So do not focus here. Do not focus here. Focus here instead, because this gives you the true picture of the monetary implication of what is going on. I'm losing 37 cents. I'm not losing 18%. 18% sounds big. Focus on the exact amount of money that you are losing. All right? This is the amount of money that is being traded with BAT, which is just 1% of my total capital. So this bot dedicates only 1% of your total capital to a trade. All right? Now, let's continue. Now, you see this size USDT. What is this size USDT? And how does it come about? This size USDT is your margin multiplied by your leverage. You see the leverage is 10x. When you multiply this by 10, you get this. Okay? You see leverage there, they wrote 10x. Now, what is leverage? Leverage in futures trading means that you can control a large amount of an asset with a small amount of money called what? Margin. That means that the exchange is telling me, if you, for example, if you bring just 10% of the total amount of money needed, we'll give you the opportunity to trade BAT 100%. So I put in 2 USDT, but I'm controlling 20 USDT worth of BAT because of the leverage that the exchange has made available for me. Do you understand? For instance, if you want to buy 1 contract of gold futures, which represents maybe 100 ounces of gold, you only need to deposit a fraction of the contract value. So that fraction of this contract value is what I deposited. And the exchange is giving me a larger size of 100% based on a 10% deposit. Now, leverage is a double-edged sword. Okay? The higher your leverage, the higher the profit you make per trade. But if the market moves against you, the higher the losses that you are going to incur. So when you see people making $200 with $20, they are using high leverage. If they were to incur losses as well, that is the amount of losses that they are going to incur. All right? So that is that with leverage. So when you look at your back office and you see something like 10x, it is leverage. It is, in a layman's language, like the loan that the exchange gives you. Say, okay, you are not bringing the entire money. Just bring 10% of it. We will allow you to interact with the total amount. All right? So it's like they are magnifying your actual deposit. Okay? It doesn't happen in spot. It's only in futures that the exchanges gives you this kind of leverage. All right? Now, let us analyze cross. What is cross? Let us explain what cross is. Okay? In your exchange, you will come across cross or isolated. So what is the difference between cross or isolated? Now, this cross right now, what it means is that for BAT USDT, how much is being traded for me? $2, $2.03. Okay? If market were to move against me for BAT and my $2.04 is finished, is exhausted, please do not close my trade. Cross is saying do not terminate the trade. Immediately go to my reserve, what I still have left in my margin balance, get more money and continue trading BAT. I am optimistic that BAT is going to give me a lot of profit. So even if the current amount of money that is being traded there is exhausted, come on, feel free. Go to my margin balance and take more money. That is what cross is saying. All right? Isolated on the other side, which is the other one that you have. Isolated is saying that after this money that I'm using to trade BAT is exhausted, market move against me, I am a coward, I am afraid, I don't like risk. Don't ever touch what is remaining in my margin balance. Don't. I am isolating this money to BAT. As soon as it finishes, that is the end of the story. Do not dare touch my margin balance. Don't try it. So you see the difference between cross and isolated. Now, let me tell you another interesting thing about cross and isolated. Well, let us analyze this thing called liquidation price. Now, what is this liquidation price? This liquidation price is telling me that if the price of BAT rises to 2.3557, my account will be liquidated. To calculate this liquidation price, it has already taken into cognizance my backup funds. Since I'm saying it shouldn't end here, if this one finishes, continue to use what I have in my margin balance. So this liquidation price has taken into cognizance not only this money here, but also my backup funds, to say that now this market is moving against me. You see, I say the price will go down. That is why it's a sell or a short, like that logo in front of it. But right now, the price has moved from 0.22 up to 0.23. It is going up. That is against my prediction. So they are saying that if the price continues to pump and it gets to $2.354 and I'm on cross, after putting into cognizance my backup funds, all my money will be finished. If this BAT pumps to 2.3542 per token, all my money will be finished. The market would have moved against me and exhausted all my money that is on this trade and my total margin. My margin on this trade and my total margin would be finished. Now, before you begin to panic and check whether your trade is safe or not, look at it. It pumped from 0.22 to 0.23. Now, do you know what it would take for BAT to pump to 2.3? Something that the market price is 0.223. That means it will have to move from 0.23 to 0.24 to 0.25 to 0.26 to 0.27 to 0.28 to 0.29. It will now get to 0.3. It will now start 0.31 to 0.32, 0.33, 0.34, 0.35, 0.36, 0.37, 0.38, 0.39. It will now get to what? 0.4. It will now go from 0.41 to 0.42 to now get to 0.5. It has not even gotten to 1 USDT yet. So you can tell already that your liquidation price is very, very far. This liquidation price is very far from your current market price. Your chances at liquidation based on this trade is very slim. And that's why you see, what is your risk? Your risk is just 2.65% and it's in green. You're not in danger. You're very safe. You're very safe with this trade. You're very, very safe. Now, look at this TRX USDT. A layman that doesn't know anything about crypto would think that this trade is riskier than this trade. Why? Because this one is 41.84% loss. This one is 18% loss. So this 41.8% is riskier than this one. No, you lie, bro. As a matter of fact, this TRX trade is even safer than this one. Why? In this TRX trade, liquidation price is what? Not indicated. We can't see it. It's too far. We cannot even see it. It's too far. Your chances at liquidation because of this trade is very slim. It's very infinitesimal. It's very far. This one, even though it is far, but at least they told us where it is. 2.3. But this one, we don't even know where it is. So this particular TRX USDT trade, in spite of being in negative 42%, is even safer than this one that is in negative 18%. That's why I tell you guys, do not focus on the percentage red that you are seeing. Red is a red flag for a lot of people. They are scared. Okay? So how much would I lose in this TRX trade if I were to close it? It is just 81 cents. 81 cents. Because this percentage is the percentage. This minus 42% is just the percentage of the margin that is being traded that is in a loss, not the percentage of my total wallet balance. All right. Now, when you look at the leverage, of course, I explained that earlier. 10x, 10 times margin gives you the size. All right. That's why you see 1.92 times 10 gives you 19.2. I explained that earlier. So for this TRX trade, which is a buy, like I said earlier, which is professionals call it long, all right, is saying that our prediction is if the price of TRS goes up, let us make money, because we are predicting that the price will go up. But when we entered the market, the price was at 0.108, and the price has done what? Dropped down to 0.104. That's why we are in a negative. But all these negatives are momentary. Okay? The market forces, the top-notch money management of this bot is going to take us into profit eventually, because in the past over 2 months, this bot has not made any losses. Okay? So that is the confidence. All right? So people that just see red and go into panic mode, no, this video is for you to understand exactly what is going on. This trade is very safe. Liquidation price is even unavailable. We don't know where it is. All right. Now, the same thing for this ARC USDT. Liquidation price is not even available. We cannot find it. All right. So focus more on the reality of the amount of money that is being lost in that trade, not on the percentage, which can give you panic attack. In this particular trade, 52 cents is what I'm going to lose if I decide to close this trade right now. All right. So that's what it is. I want to see if I can find another example. Okay. All right. So that is how you analyze your trades, so that you have a clear picture of what is going on. All right. Now, let us look at this People USDT and MKR USDT. You see, both of them, they have, minus 94% loss. Oh, minus 91% loss. Oh, come on, guys, relax. Okay. It is minus 93% of your current margin in that trade, not your total balance. As scary as this thing looks, this trade is actually very safe, because what is the liquidation price? Too far. We don't even know where it is. Very safe. Too far. We don't know where it is. So if this, look at it, minus $2.20 in loss, vis-a-vis your margin balance of $2.37. That's why it's what? 90-something%. Remember, you have backup funds. You're trading cross. You're trading cross. Don't forget, you still have a lot of money in your total margin balance. If this 2.21 negative increases to 2.37 and this particular margin is exhausted, you still have backup funds in your main balance to continue this trade until you see it out to become a profit. All right. So, guys, look at this MKR now. MKR is look at the liquidation price of MKR, 20,196. What is the current price? 1,417. Okay. So for MKR, this MKR trade to liquidate you, the price has to pump from 1,417 to 1,517 to 1,617 to 1,717 to 1,817 to 1,917. It will now get to 2,000. It will now pump from 2,000 to 2,417. From 2,417 to 2,517 to 2,617 to 2,717 to 2,817 to 2,917 to 3,000. It will not, before it will get to this 20 USDT. It is not likely to happen. The market will retrace in the direction we want before it gets to your liquidation price. All these things will go to green again. So a lot of people that panic is because they don't have the understanding of what is going on in their back office. Okay? You see a lot of people, they will just come to this MKR trade now. They'll click on share. When they click on share, like this, and they share it, or they send it to somebody. The person will say, oh, you are using a very bad bot. Oh, you have lost 92.85% of your capital. Shut down that bot. But that's not the reality. That's not the reality, bro. Okay? You need to have an understanding of what is going on in your back office. Okay? And if you are using a very good bot like the one that I am using, you will be very, very certain that all the negative positions are going to close in green, in positive at the end of the day. All right? So if you want to close a particular position, maybe you want to close a particular position if you are in profit, and you, for some reason, you don't want to wait for your bot to take the profit for you. If this is in green, and you want to take the profit by yourself, what you do is tap on that particular trade. The trade is highlighted at the top, but you have to look for it in the position below, so that you can, it's TRX USDT, so that you can see everything there. Okay, this is TRX USDT. Then you click on close position. When you click on close position, then you click on confirm, and you will see the reality of what you're about to do. Okay, if I were to close this position now, I'll lose 81 USDT. But if it were in green, in positive, and the board has not taken the profit yet, and I'm impatient, that is how I will still go and take that profit by myself. But I don't encourage people to interrupt what the bot is doing. Okay, this is a 100% automated bot that is trading for me. 100% automated bot with top-notch inbuilt money management settings, exquisite stop loss, amazing speed, take profit speed, trailing take profit. Okay, trailing take profit means that if it sees profit, it will immediately. Let me give you an example. Okay, if you started a trade with you entered the trade at 2.1 USDT for that particular coin. Okay, and you are longing, the coin now goes to 2.3. okay, if it's some other bot, they'll quickly grab that 2.3 and exit you from that trade. But this bot uses what they call trailing take profit. This bot, instead of taking this 2.3, what it will do is it will shift its stop loss to 2.2 and stay in the market waiting for this 2.3 to go even higher. I don't know if you get the picture. So that if it goes to 2.4, for instance, it shifts its stop loss to 2.3, waiting to grab that 2.4. Now, if the market continues and it moves to 2.5, it shifts its own stop loss to 2.4. If the market now falls back to 2.4, it has now taken a profit of 2.4 USDT for you, as against the one that is not using trailing profit, that would have just grabbed that 2.3 the moment it saw it. So a bot that is using trailing profit in the long run makes more profit for you than the one that any profit it sees, it just takes it. Meanwhile, the market is going to go above that, but it is impatient. It just triggers the take profit immediately. And imagine you see a scenario where a trade moves from let me give you a hypothetical situation where from 2.1, your entry price, it moves to 2.3. And you quickly take that profit and you close that trade. What if the market proceeds from 2.3? Proceeds from 2.3, eventually gets to 2.7. You have already left the market at 2.3 because you are in a hurry. But a bot that is using a trailing profit, as the market gets to 2.7, it puts its stop loss at 2.6, still following the market. If eventually the market drops down to 2.6, it takes it and it exits. It has made 2.6 for you, as against the 2.3 it would have made if it had no trailing profit. This robot is 100% automated, hands-free. You don't have to do anything. The robot, as soon as you set it in motion, plug and play, hands-free, it will open all positions for you. It is based on deep machine learning, collating all the data of its stats of what has been happening in the market over a particular period of time to inform its decision in the market. Hardly closes a trade at a loss. Okay? So if you're interested, send me a message so that we'll get you started. The registration link is in the description of this video. Get started, send me a message, tell me what your username is, then we'll get you started. Okay, so I believe that we have touched on the very, very important point. Let us look at this film, FLM USDT. Okay, it's unique because it's using a 1x leverage. That is why you see that this margin is the same thing as this size. So in this particular trade, the bot is saying, please, so I don't want to take high leverage. Okay, I don't want to take high leverage. That is why what I put into the market, please give me exactly what I put into the market. Don't increase it for me, because this is a Greek gift. As you are increasing the benefit, if market moves against me, you are going to increase my losses as well. So for some reason, the bot is being careful with this FLM USDT, so it's using only 1x leverage. What I put is what I get. That's all. No bonuses, nothing. And the trade is very safe because liquidation price is not showing. Too far, we can't even see it. All right. So guys, that's the end of this video. I hope that this video benefits the newbie so that you don't keep giving yourself high blood pressure over trades that you don't have anything to worry about. Okay. Thank you for watching this video. I remain Victor Isibor. I'll see you in the next one. It's bye for now.